Hello friends, a stock that is really close to my heart due to happy memories from childhood is Disney, and in this video I will analyze Disney Corporation for you. In this video we will check what is Disney about, what valuation I give to Disney stock myself, and then we run it through by the Arctic Money criteria and ranking and see a little bit how it compares to other stocks I have analyzed. But first, let's begin things with overview on Disney Corporation by ticker.com. The Walt Disney Company, together with its subsidiaries, operates as an entertainment company worldwide. The company's media network segment operates domestic cable networks under the Disney, ESPN, Freeform, FX, and National Geographic brands, and television broadcast network under the ABC brand, as well as 8 domestic television stations. This segment is also involved in the television production and distribution. Its parks, experiences and products segment operates theme parks and resorts such as Walt Disney World Resort in Florida, Disneyland Resort in California, Disneyland Paris, Hong Kong Disneyland Resort and Shanghai Disney Resort, Disney Cruise Line, Disney Vacation Club, National Geographic Expeditions and Adventures by Disney, and Aulani. A Disney resort and spa in Hawaii, as well as licenses its intellectual property to a third party for the operations of the Tokyo Disney Resort in Japan. The company's studio entertainment segment produces and distributes motion pictures under the Walt Disney Pictures, 20th Century Studios, Marvel, Lucasfilm, Pixar, Searchlight Pictures and Blue Sky Studios banners, develops, produces and licenses live entertainment events, produces and distributes music and provides post-production services through Industrial Light and Magic and Skywalker Sound. Its direct-to-consumer and international segment operates international television networks and channels comprising Disney, ESPN, Fox, National Geographic and Star direct-to-consumer video streaming services consisting of Disney Plus/Disney Plus Hotstar, ESPN Plus and Hulu, and operates branded apps and websites such as Disney Movie Club and Disney Digital Network, as well as provides streaming technology support services. The company was founded in 1923 and is based in Burbank, California. Although Disney is a global company, clearly most of its assets and money flowing to the company is from the US market. When we talk about Disney, we need to look the data through longer periods of time, both in the history and in the future. The recent history when we talk about financials is messed up because of COVID and the lockdowns, which obviously affected, for example, the park segment of Disney. The amusement parks quite a lot, and the future will obviously be disrupted by the success of Disney Plus and other streaming services. Since its launch, Disney Plus has already achieved 138 million subscribers globally. In comparison, Netflix has 222 million subscribers, so Disney is already doing pretty good in my opinion compared to market leader Netflix. Streaming is a highly competitive industry, almost like airline industry, that can be doomed to low profitability in the future, but if one or few streaming companies emerge victorious, they could create ecosystem-like businesses and see good profits also in the future. Disney could be the one who succeeds in this streaming wars. But when we turn our look to the theme parks section of Disney, it gets almost as interesting as with the streaming services. In the US, the theme park industry is a duopoly between Disney and Universal Studios. Due to huge capital requirements and other inconvenience to actually set up a huge amusement park, these two profits can be said to be pretty well protected by the moat of huge capital requirements, or in other words, barrier to entry by the competitors. It is difficult to see a threat of competitors in this niche business of theme parks, truly. On top of barrier to entry moat here, you need to fill the theme park obviously with things that people find fun and lovable. This is where another moat enters the stage with Disney. The brand moat of Disney and also Universal Studios. Disney has the world's most loved franchises and characters that are the design for any roller coaster, any restaurant or any other things you find in amusement parks. You have characters such as Mickey Mouse, Donald Duck, Darth Vader, Iron Man, Captain America, and hundreds of more by Disney. Many companies would have the money to build a theme park, obviously, but they lack the lovable characters to fill the theme park with, as Disney has. So, we are talking about two powerful moats here with Disney, difficult for competitors to overcome, if not even impossible. By the way, if you are more interested in this topic of amusement parks, I suggest you go and check out a YouTube channel called New Money, which just recently launched a really good video on the theme park industry in the US about the duopoly between Disney and Universal Studios, so go and check it out after this video. Personally, I think Disney's biggest moat is scalability. We all know that Disney already has a huge number of innovations, or in other words, successful franchises with lovable characters, and they keep on acquiring and inventing more also in the future. Let me give you an example. Baby Yoda from the series on Disney Plus Mandalorian was a new character that became a hit. Now, first you created a spin-off from a hugely successful Star Wars franchise, where you had this new lovable character, Baby Yoda. How can you scale Baby Yoda further? Here are some examples on top of the character in The Mandalorian itself. Some might exist, some are just things I come up with here now. For example, you could have Baby Yoda spin-off from the actual series of Mandalorian, Baby Yoda game for smartphone, Baby Yoda merchandise, for example, toys or clothing, Baby Yoda roller coaster in Disneyland, Baby Yoda on ice, the figure skating event of Disney, or whatever. You see what Disney does every time with their characters. They can take one good innovation, one good character, and amplify its success through all of the channels belonging to Disney Corporation. It is powerful use of resources and innovations, in my opinion. Can their main streaming competitor Netflix do this? No. This is why right from the start I prefer Disney over Netflix myself, due to its optionality or scalability, whatever you want to call this moat. But another thing we need to address with Disney is Disney's debt. It has a lot of debt, which is something to always be concerned about when investing. I admit it, I'm not a corporate debt expert, but I hope Disney have some working under their CFOs. Net debt is a bit over 42 billion, which of course sounds huge, but then again, equity of Disney Corporation is $104 billion, so I believe it can manage the debt one way or another. I guess in specific in the streaming wars going on, you need to spend money to make money. That's just how it is, like it or not. Personally, I need to be careful with this investment because I do acknowledge that I want to like Disney as a company. I want to own it because I love Disney. I bought Disney Plus for a year with special offer a while ago, like 1.5 years ago or something, when it launched here in Finland, and really enjoyed Mandalorian and Marvel series. Now I have not had it for a year now, and I know there is new Star Wars and Marvel content available that I would like to check, and I think I will purchase it again soon someday here. Clearly I got hooked to Disney Plus. And what is more remarkable is that I do have Netflix and Viaplay available to other streaming services, and sometimes I find myself scrolling them, not wanting to start a new series because I'm not sure if I will like it or not. Also, same goes with movies. The other day I wanted to check a movie and ended up watching Saving Private Ryan, a war movie I have seen before, I think 1 or 2 times at least, but I know I like it because it's a classic. I didn't want to try anything new because I didn't know if I would like any new movie. I wanted to see something I'm definitely gonna enjoy. Obviously this might just be me as a consumer. We all are different consumers. We're not similar. But I know I'm not alone with my love for Disney. For my generation, Disney is quality. When Disney makes something, you know they have high standards every time. This, kids, is what we would call a brand in economics, in my opinion. Now let's check my valuation on Disney. As said earlier, not the simplest of valuations, again, as during the recent years Disney has been in turmoil due to COVID lockdowns and also entering new business segments with Disney Plus and streaming. As always, making a valuation includes lots of assumptions, so I will not go too much deeper now in how I made this valuation, as this is something you all need to do yourself if you want to invest in Disney. Remember, only my opinions on this channel, no financial advice. With that said, I arrived to the following conclusion. With annual expected return of 10% and big enough margin of safety, this time mainly due to the net debt Disney has, my buy target for Disney is $75 per share. The stock price has been following the normal cycle pattern during and after COVID times as many other stocks. First huge COVID dip down, then huge climb up with quantitative easing and money printing and stuff. And now starting from March 21, actually steady decline down with the Disney stock. Now today Disney sits in around $95, so I need it to come down quite a bit still. But I know I'm going to be very happy if I can start accumulating Disney at $75. I hope the stock price keeps on coming down. As you already know by now, I really like Disney as a company and what legendary company it has been throughout its history. Now let's conclude with Arctic Money criteria and see what other things might affect my investment decision on Disney. So here you can see the criteria. First up, do I understand the business and the industry? 0 to 5 points. I give 4. I'm pretty confident with Disney as I have owned it previously in the past. I have read quite a lot about the company and I have a good feel about the company overall. So yep, I think I understand the business and that's why high 4 points. Does the business have moat? 0 to 5 points. Well, I'm gonna give a 4 on that too. For the aforementioned moats of the barrier to entry, huge capital requirements if one wants to set up a theme park, and the other mode obviously is the brand mode. Huge number of lovable franchises and characters Disney has, so gonna give a 4 for that too. Does the management team and the board have skin in the game? That's a 0 point. I tried to check it and I think the management team and the board own really little stock of Disney, so I can't really say they have skin in the game, and this is a bad thing for me because I do like to see my management team and board having skin in the game, so something I really don't like, so that's a 0 point. Are insiders buying the stock? Actually no, there wasn't any insider buying really that I could find, so 0 on that too. So are super investors buying or holding the stock? Yes, there was some owners, some big owners, Lindsay Train and Pat Dorsey having quite big positions as you can see from this picture. So I'm gonna give it at 2 points there for some super investors holding the stock and Disney being a significant part of their portfolios. Then are people who I follow buying or holding the stock? Actually none, so that's 0.2. I think this is the first time I have given in this criteria 3 0 points on any of these criteria. Then finally, discounted cash flow, intrinsic value, is the stock undervalued in my opinion? Gonna give 11 points for that, so for return of 10% annually without much margin of safety at all, Disney stock price is already there for that 10% annual returns without margin of safety though. And yeah, Disney might be a good investment already at these levels, but as said, due to the net debt being quite a huge, I need to see the margin of safety, I need to have it, and thus the valuation of mine was $75, and as the stock is now $95, that is not enough for me, and that will score only 11 points here. Next up, let's check the ranking, how Disney compared to other stocks I have analyzed. And now, before we go to the ranking itself, in the last video, on Croc's video, I told you that I wouldn't update the valuations on the previous stocks I've analyzed, but then I went and did exactly that. So I have an updated ranking for you now. The valuation points compared to valuations I have done, compared to the stock price, what it is actually today. Those points, so this last criteria of 20 points has been updated. So the valuations are updated with every stock in the ranking, but I didn't update on any of these other 5 point criteria. So I just like to keep this ranking as a nice tool for me that gives me some sort of feel how these stocks compare to in the order of importance for me, which one should I prefer. It's a nice tool for me, nothing to be taken as a truth, but yeah, I did a little bit updating, so without further ado, let's check how my ranking looks now. And here you can see the ranking. As you can see, Disney does pretty poorly and ends up only above Manchester United, which was a terrible stock at the time from the from the view of investing perspective of investing. Really didn't like Manchester United as a company, and Disney actually does pretty poorly here on my ranking, only 9th place with 21 points. But as said, you saw what Disney scored 0 points there. I think those points can improve, and the valuation will definitely improve if the stock price comes down to $75. So with that in mind, you might expect, I hope Disney would climb up this list someday soon in the near future, so I could become an owner again of Disney. But now, as things stand today, with the stock price a little bit on the expensive side for me, Disney becomes only in the 9th place. And you can see there now that I have updated the valuation, it's pretty natural that those one I own in my portfolio with the green one will be on the top as they are. And this is a good sign. I think I have made good picks there. If it was something else, that would be pretty weird, I guess. But yeah, there you can see all on green are in my portfolio now. And for those of you who have been watching my recent videos, you could also guess that what I said was my buy price target with Meta and Crocs. With the recent declines happening, those prices did come down to my buy price target from where I wanted to start accumulating them. So Meta Platforms and Crocs are new stocks in my portfolio, and all the rest has been existing there for a long time now already. So here the ranking, and let's move forward. And when I say let's move forward, I mean this was it. Stock analysis of the House of the Mouse. If you liked the video, please subscribe my channel. It does not cost you anything to do so. Thanks for watching. See you in the next video, and have a happy midsummer wherever you are in the world. We here in Finland definitely will enjoy ourselves as the holiday season begins now and midsummer is approaching. So thank you for watching the video, and see you in the next one. Bye bye.